the Nasdaq Composite hit an all-time record high. So I'd love to kick off by just asking Bruce, are we in bubble territory?
Yeah, I get asked that question a lot. I mean, we're in very different times than we were in the late 90s. First of all, the number of public companies in the late 90s on Nasdaq was around 5,000. Today it's around 2,700. And when we really look at the companies that are in the index, we do think the valuations are pretty reasonable, so we feel good about where we are.
Now Jeff, you're in charge of Nasdaq private markets. Do you worry about a bubble in private valuations? We've seen a lot of companies recently go public with prices that are below their most recent private valuations.
Well, what we're seeing is a lot of investors are coming from the public markets into the private markets. Private companies are staying private longer before they go public, and they're achieving a lot of the growth that they historically would have had in the public markets as private companies. And so you're seeing investors cross over into the private markets. That influx of capital has definitely increased valuations, but at the same time, you have much more mature companies in the private markets than we've ever seen in the past.
So are you guys ever competing against each other in a way? Like, trying to bring companies over from the private markets to get them onto the
Yeah,
public?
no, we started the Nasdaq private market because we did think that there's an opportunity. As Jeff said, companies are staying private on average 8 to 10 years before they go public. And we think we're the right player to really help them as they have needs in the private market, whether it be liquidity, managing their cap table. There's a lot of services we provide to those private companies today. So we think it definitely complements each other in the businesses we own.
Now, listing services are not Nasdaq's only business. You guys also do investor relations, corporate services. What happened with the Twitter earnings last week?
Yeah, I think that was obviously something that we regret, but we support 96% of the S&P 500 for earnings calls. We do a great job. Customer service is very important to us, so we regret what happened with Twitter, but we always learn from those issues and go forward.
And now, at this conference, there's a lot of founders, a lot of startups which are raising money, and some of the companies here are probably more valuable in terms of enterprise value than even some of the companies listed on Nasdaq. Why should founders bother with the headache of an IPO, and do you ever worry that IPOs are becoming obsolete?
Now, we're having one of the best IPO market we've had in years. Last year, there was 189 IPOs on Nasdaq. So far, year to date, we have 41. We have 12 IPOs scheduled to price this week. So the IPO market is definitely doing very well. And I think that if you look at what's happening in the private markets, as Jeff said, investors are coming into the private market earlier, allowing those companies to stay private. So when they do go public, they're much more mature companies, and that's good for the markets in general.
And what are you guys looking at for the year ahead in terms of trends, both in the private markets, Jeff, and the public markets?
Well, I think what we see from the private companies is they really are looking for control. So they want to control who their investors are, they want to be able to control when and how they can provide their shareholders and their employees liquidity, and they want to be able to control their own outcomes, which a lot of it today revolves around being able to attract and retain talent. And so that's really one of the driving forces behind Nasdaq Private Market, is giving companies that control so that they can provide liquidity which will help them attract and retain talent, because that's really what it's all about in the Valley right now.
In terms of transaction volumes and values, though, do you think private markets are going to keep growing, or what sort of trends there do you expect?
Yeah, again, I think as investors are coming down from the public markets and you see more different types of investors coming into the private markets, that's always going to be driving the transaction volume.
And what about the public markets? I know we've come down a little bit since the high. What do you think are going to be the big macro trends for the rest of 2015?
Yeah, well, we're still seeing a very big pipeline of companies that are looking to go public in 2015. We always look at applications, and our number of applications that we have on file currently to go public in 2015 is almost double what it was this time last year. So we are confident there is a nice group of companies that are ready to go public. And we just kind of wonder if the trends will continue. Healthcare was very big in 2014. Of the 40 IPOs that I talked about earlier, 23 have been healthcare. So you just kind of wonder how many more health companies are out there, but there's definitely a diversity of companies that are coming public.
And what's your pitch for tech companies? I know you guys are always competing with NYSE for Nasdaq. What's the...
Yeah, well, we are very proud of the fact that Nasdaq's only been around for 44 years. We have the largest company in the world listed on Nasdaq with Apple. And the most admired brands are listed on Nasdaq. And we have 70% of technology companies listed on Nasdaq. So we feel very comfortable in our tech dominance, and we'll always be the player in tech.
Great. Well, thanks very much to both of you. And just as a final question, I'd love to go back to the private markets and And just perhaps for our audience, you could just tell us a bit more about the history of private markets. I mean, NPM just launched last year. Would something like this have even been possible 5 years ago?
Yeah, so the history of private markets, I'd say really the catalyzing event was when Facebook decided to stay private longer than most companies. And that was done for a number of reasons, but again, back primarily to the idea of control. A pretty vibrant market came up around the shares for that company, and they were the first company to run one of these private company liquidity programs. That was a $200 million program that was run back in 2011. Now, fast forward to today, we're working with a dramatically higher number of companies than could have done these types of transactions back then, and with much smaller programs. And that's because the technology's gotten better, investors are more comfortable coming into this market, and there's just a wider acceptance in the Valley in terms of providing liquidity pre-IPO. So I think we really have seen now a growth in terms of the acceptance and the idea that private companies providing liquidity actually helps keeps incentive aligned with their employees, as opposed to the kind of mindset back in the 90s, which was everybody should hold out for the IPO.
And one of the reasons we actually launched the Nasdaq private market was we saw what was happening in the private market space. And with the Jobs Act, you went from having 500 investors to 2,000 investors, not including employees. We thought you could really create a liquid market for these companies. So that's when Nasdaq kind of got into the space about a year ago. And we're very, very proud of our success. We have about 90 companies that are involved in the Nasdaq private market to date, and it's growing rapidly.
Great. Great. Well, thank you both so much for joining us today. And I guess in conclusion, we've got a lot to look forward to this year. So thanks so much to both of you.
Thank you. I think we have about 2 more minutes and we'll get going. Yes, we're going to close the market here in a minute. So
that's right. If we have any audience questions, I see one right there in the front row.
Okay. My question is the hurdle for public offerings. We raised the bar dramatically after 2001, 2002, and you've now created a market for pre-public companies. Do you think that bar to get into the public market needs to be reduced a bit, or how do you feel about the way you've mapped out the market for Nasdaq?
yeah, well, I think it's just that there's a different market today than it was back in 98, 99. You have Fidelity, Wellington, T. Rowe Price, they're investing in these private companies at much earlier stages because they do want to participate in the IPO. So I think you're just looking at a totally different type market. So I don't know if the bar has been raised as much as the type companies that investors want to see. Some want to get involved early on in the private side, and then obviously others will wait until they go public, and mainly the retail investors will be the ones that will trade on them when they go public. So it's just a different climate for investors in general. And that's also what's kind of driving the IPO market. As equities are popular again, we'll see more money flow into the equities market and then thus more IPOs. So we feel good about, kind of where interest rates are today, the fact that equities are back in vogue again. We think that's a good thing for the equity markets.
Great. I think that's all we
Diana's
have
wrapping me
time
up.
for today. So thanks very much to you both.
Thank you.